Taplin and you're watching the Press Review. Global economic growth is moving dangerously close to stalling as stresses and strains in emerging markets countries like Turkey, South Africa and Argentina start to take hold. It's highlighted by a recent announcement from Turkey's central bank that an emergency meeting will be carried out today to try and tackle the financial contagion plaguing the country. The Turkish lira last week plunged to new lows, and despite rebounding amidst central bank efforts to bolster it for the first time in 2 years, there is a realistic chance Turkey may have to hike rates to rescue its suffering currency. Chief Emerging Markets economist at Standard Bank, Tim Ash, said, "We need to see a significant hike in policy rates, and it needs to be meaningful. In the past, the bank has been half-hearted and temporary. The stakes are higher now, and the market wants to see a more coherent, credible policy." Emerging markets countries like Turkey are under pressure to keep their interest rates low in order to help maintain global economic growth. However, the byproduct of this is high inflation. But although Turkey isn't big enough by itself to affect the global economy, it could act as a catalyst for other emerging market countries, whereby they all decide to raise interest rates too fast and paralyse their economies. The consensus amongst some analysts is that the Turkish central bank is unlikely to raise its 4.5% benchmark interest rate, but could increase its overnight lending rate by 2 or 3 percentage points, up from the current level of 7.75%. Turkey's central bank has so far defied the markets by resisting an alteration to its key policy rates. But as a result, the country has already eaten up $19 billion trying to stop the slide of its currency. This has led some analysts to believe Turkey is at a greater risk than other emerging markets economies, not only because of a depreciating lira, but because of a lack of action and increasing political problems, including that familiar old word, corruption. The director of the economic research company Medley Global Advisors says, "People were spooked by the political risk, but the real problem is the lack of clarity on policy. Once a political problem is compounded by a market one, that is a signal for people to cut their positions quite drastically, and that is what they've done." Well, Turkey there in a critical condition. Well, that's it for the Press Review, but join me later today as we look ahead to the much anticipated FOMC announcement. Bye-bye for now.